Well, good evening, ladies and gentlemen, and thank you for being with me this evening. And it's good morning to our friends on the east coast of Australia. Good afternoon to southern parts of the state. So this is the glorious sunshine state of Queensland, but here we are. And it's good afternoon to those of you across the ditch from us. Could somebody please just type in the question box that you can hear me all right, if you'd be so kind. 1, 2, 3, 1, 2, 3. 1, 2, 3. Got it. Oh, Mark, you champion. I'm going to ring you next week and we're going to do an interview. Folks, that's Mark L., who's a wonderful, stalwart Danielcode guy, and he never misses a tutorial. And he's the reigning record holder for paper trading and enjoying his trading very much. Okay, so grand to have you all with me this evening, folks. And all our usual friends are here. Chase is here. Douglas is a new guy. Good to have you. George, we know you. Good to have you here with us. Plenty of Georges. And Grant, we haven't seen you for a long time. Glad to have you here. Of course, Gregory Palladini over in California wouldn't be a party without Greg. He's been a wonderful supporter. Harold up in Redding, California. I did a tutorial up there once, and Harold was our host, and so gracious and so generous. A wonderful, wonderful man. Joe's with us. Joel from Vero Beach is with us. Leo, I'm glad you're here, mate, because I'm going to use some of your charts today, some of your day trading charts. Mark L., of course, another Mark. Miles. Great to have all of you here, folks. Let's go. Milton's with us. You need Milton. Don't start without Milton. Ned's with us. PG. Peter Mack, who's not a day trader. Plenty of other Peters. Richard, of course, yeah. Sanjay, good to have you with us, my friend. It's been a while. Sean down in Adelaide. Hope the family's well. Steve, there's a new one. Todd down in Southern California. Long-time Danielcode supporter. And, of course, Vicky. And it's grand to have you with us. Vicky, we don't have many lady members, and we should have more. And we like to welcome them, particularly when they're here. Okay, folks, I've got so much to talk to you about today, and so we better get moving. I guess if you've been following the Danielcode trading signals, you probably got exhausted counting the money. We're just having the most momentous week, and with a little bit of volatility and some two-way trade in gold and other markets. It's just absolutely wonderful. We'll get into those as we go. So, I show you this side every time, that markets are rational, orderly, and sometimes predictable. And what I haven't got around to doing, folks, I've been at this since 4 o'clock this morning. I haven't put in the latest forecast for the big turns in the S&P, and I'll do that, and I'll put it up on the website, or I might send you a letter about it. I'll get that done before the weekend. And remember, the business of trading is not to be right. The business of trading is making money. And that may sound crass, but that's the business we're in. And once you get it right and you're trading Danielcode, markets become your friend. And they exist to give you health, wealth, and happiness. But there's only two states for a trader. You're either trained or you're untrained. And if you're untrained, the best thing you can do is contact me, and I will teach you everything that is worth knowing about trading futures and Forex. And today's webinar, we've got a lot of stuff to go through. We've got a few new members, folks, and some of them have asked about the basic Danielcode tool. Some of you saw this 2 weeks ago, which is a fortnight. Greg's son will remember that. He's a great one. It's not an expression used in America, fortnight. It's a British expression, I suppose, and it means 14 nights or 2 weeks, basically. So some of you will have seen that as I go over the Danielcode tools today. So if you have seen it, bear with me. And from there, I'm going to go on to day trading. And I see that the Robins World Cup, now they've opened a new competition for day trading, which is a complete change of pace for them. And if you go and have a look at the margins, it's the concessional margins being offered for day traders. And I just haven't looked at it today, but at some stage you could trade the S&P E-mini on a $500 margin, same for Dow, same for Russell. And it's gone up a bit since then, I know, but not a lot. So there are very, very reduced margins for day trading, which is why it's become so popular. And of course, Leo, who's with us today, done the whole Danielcode tutorial, but he is really loves day trading. And as I say, I've borrowed a couple of his charts that he sent me to show you just how the Danielcode works on day trading. We've got lots to talk about with gold. The US dollar is pretty self-explanatory what's happening with that. Grains, just to comment on some of the more extended price movements this week. And of course, then we have to talk about US T-bonds. And I have to tell you that things are getting pretty dire with the interest rates that the Fed's been pumping up, which is copied everywhere else in the world except Japan. It's all happening. This is gold on Tuesday, and this next one is gold today. And you can see this trade. I mean, $11,000 per one contract straight down. That hasn't happened for a long time. But why I'm putting these charts on to show you is that at these arrows, which refer to either the close or the low, all of those bars had perfect, close enough to perfect Danielcode target recognition. So all of these red and blue lines you see on these charts are price targets. They're actually taken from our series of time studies that is what the Danielcode is based on. And we simply take exactly those same time studies, which are vertical on the chart, and put it on as horizontal to make them price targets. And they work like a dream. And they've been working like a dream for a very, very long time. But gold has just had a wonderful trade for us here. Okay, so we're going to have a look at some of these Danielcode tools and do it fairly quickly. You'll be able to see this recording tomorrow. Terry will post it and can go over this at your own speed whenever you like. So this is a gold chart. This particular piece of chart happens to be in 2015. And it's a piece of chart that I use when I'm teaching the Danielcode tutorial because it's got everything in it that can get you wrong. In other words, I'd rather teach you the tough stuff. Once you know that, you'll be bulletproof from the everyday dramas. So if you look at that low there, we know it's an important low because it's such a complex low. And by complex low, I mean that it has many bars either side of it. And the more bars it has either side of it, the stronger and more important the turn is. So that's a very important low down there in late July, early August 2015. And you can see from that we've got a swing, an important swing. There's lots of minor swings in that, but that's the important swing because the same basis, it has many bars either side of it. And that's one swing, and if we move a little further back, we can see there's another important swing there as well. So two important swings mean you have two lots of Danielcode retracement tools. So for those of you new to Danielcode, go to your Trade Navigator, and what you will have is a couple of, they'll look to you like blobs because they're so small. But when you put your cursor on those particular little pictures, one will say Danielcode retracement, the other will say Danielcode time cycles. And you simply, for the retracement, you simply left click and hold at any high or low and drag it up to the corresponding high or low that you want to see what's happening. And these red lines will appear as you can see on these charts. And then once we have them there, as you put your cursor on them, they'll have a hand, and you can right click there and change anything you want to. And as you move it towards the right hand side, the hand disappears and a double-headed arrow pointing left and right appears, and that means that you can right click and hold that line and drag it across to anywhere you want to. One of the things to remember is that when you put it on for the first time, move up onto one of the lines. You'll see the hand there. Right click and go to edit, and you'll see that the 62.5% retracement, which is not a Danielcode number, that actually comes from the rule of eights, as does the 37.5% retracement. But that's shown, that's not displayed, because in that general area of the market will nearly always elect the 59% retracement. But turn it on, because sometimes it's important. And you can see on this chart, for example, a couple of these highs, you needed to be looking at the 62.5% retracement. So 62.5% comes from the rule of eights, and of course it gained notoriety, nothing to do with the rule of eights, but it's to do with Elliott wave theory, and the teaching that Elliott wave theory is based on Fibonacci numbers. And that's a very big jump indeed, because Fibonacci numbers are not accurate. They're simply assessments or averages, if you like. But one of the important Fibonacci numbers, 61.8, is close to the 62.5, and I call it the NFI ratio. When market makers don't know what to do, they'll try and park it somewhere near a Fibonacci number, because that's how they've been trained. And for the last 47 years, we've been forcing anyone who wants to work in a brokerage or have been CTA, what have you, we've forced them to learn Elliott wave theory, which has been absolutely wonderful for Bob Prechter, who's a great guy, but pretty lousy for those of you who've been well, brave enough, I should say, to trade it. You'll know what I mean. So anyway, two lots of retracements. So two swings, we have two lots of retracements. We pull them across to where we want them, and we can do the same thing on the downside. All I've showed you so far is the upside. Once you've got to that stage, take that Danielcode retracement tool, left click and hold at a high, drag it down to a low. Do that 3 times here, and you can see what will come up. It finishes up. Every significant turn on this chart has come at what we call Danielcode target recognition. They look like they're support and resistant lines, and I guess they do act like that, but totally differently, because we maintain that these Danielcode ratios are so accurate that to get a valid signal that the market has recognized these numbers, we require it to be within 0.1% of the number. In other words, either the bar high low or the close at one of these preordained Danielcode numbers. And that's not 1%, that's 0.1 or 1/10 of 1%. It's pretty specific, and it's hard for markets to do that. They've got to really do some work to give you that target recognition, and that's how accurate the Danielcode is. And you can see here that just the simple red lines, the Danielcode retracement tool has found every significant high and low on this chart, and often you'll see 2 lines overlapping. There's a couple of them here. One's up at that 1191 level, the other one down at the 1155 level. And folks think, because a lot of people teach, that if you can get 2 different targets, it makes it stronger. It doesn't actually. That's just a function of how markets work, that all ranges on financial charts, all ranges are functions of previous ranges. So that's just a mechanical function that causes that. So, but have your 62.5 switched on by all means, because there are times when it is most useful. Okay, so we just left that for you to think about. And what I'm doing here is still on gold, still on the same chart. And I'm going to show you a few of these Danielcode time cycles. This is a tool that we give you if you are subscribed to the website Pro or the website Super. And if you're subscribed to either of those services, contact Terry and he'll give you the files to download to create these tools. But this is a very simple start to thinking about time. And you can see where we started this. The blue line is where it starts. And that's what we call a high before the high. And that's actually an expression from W.D. Gann, the great Gann, and he talks a lot about time cycles being measured from the high before the high or the low before the low. And they've got fairly specific meanings. But just as an easy example, the first, you can see the main dominant high on this chart is May the 18th. And you can see before that there's a lower high. In other words, a high before the high. And if we put our time tool on that, the 59 gives us 1 bar after the low, and the 62 finishes up giving us exactly the low. I talked about 59, 1 bar before that big momentum bar. The 62 gave you the low of that whole move, and the 70 gave you the start of the upside breakout. Here is another one of them. This one is on, again, a high before the high. You can see where it starts. And it's giving us what we had just now, and it's giving us the next high. You can see the blue arrow on it, and the next low, and the next high. Now, these tools should only be valid for plus or minus one period because of the problem that all charts have. That we have about 244 trading days, but we have 365 real days, don't we? So we're taking 365 days of data and forcing it into a shorter period of time because of the 104 weekend bars that are lost, and 12, 13, it might even be 13 or 14 market holidays in the US. So you can see how this very simple tool is throwing up all these important turning points, which make it very nice indeed. Now I've added the downside targets here as well, and all we're doing is we're starting from a high before the high or a low before the low, and as you can see right the way through now into December, mid-December 2015, it finds the final low of that move down on the 59-day cycle. Amazing stuff, isn't it? And that's just basics. If you're interested in time, go and the website, and there's an article, a massive article I've written called The Other Way. It's available at the website. Just click on the link, and you can read all about how time controls all markets, and it does. Okay. So if you like that and you want to learn about that, think about a Danielcode trading tutorial. There's the link, Danielcode Learn to Trade, where I teach you everything worth knowing about futures and Forex. We talk mainly about futures at these webinars, but I actually started off as a Forex trader, and so did Greg Palladini when he came to the first tutorial that he did with me. And of course, we both pretty much switched to futures now because the problems that Forex has, particularly in the US. Okay, so now I'm going to talk to you a bit about day trading, and you're going to be surprised at how easy it is and how simple it is. And I have been a day trader. I've traded everything down to 3 tick bars. If you really want to age yourself and send yourself off to a madhouse prematurely, trade 3 tick bars. I mean, they just keep coming. Whack, 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 whack. Anyway, what I'm showing you first of all is daily bars, and your question is, what's this got to do with day trading? Well, Here's the simple answer. All markets are controlled by the Danielcode time and price ratios. And I want to point out to you that every one of these markets I'm going to show you, except for I didn't have DX available this morning with Trade Navigator's problems with intraday data for those markets that are on the ICE, but there's everything else here except the S&P. But same comment for Forex. I could have shown you a heap of Forex, but they still, Trade Navigator don't have the intraday data for Forex. So that was S&P, I think, did we say? Yeah. And this is gold. And what I'm showing you here, you can see these arrows here to the close there, the low there. They were all exactly on the Danielcode numbers. And that's what markets do. They are controlled by these numbers, and they are specific to these numbers, either at the high or low or the close. Here's copper that gave us some great trading this week, 2100 up, 3400 going down. The great beauty of futures trading, you get paid exactly the same both ways, whether the market's going up or going down. And being aware of that, why would anyone not trade futures? I honestly don't understand it. I know people are scared of futures because they think it's a difficult and complex market. It's not. It's the most open, transparent, and simple market that I could find. That's why I trade it, and I'm not that bright. But things like futures are just so much derivative data. Futures tell you the story themselves. Markets are talking to you. They're trying to tell you exactly what they're doing. Anyway, look at this. There's that close on that push down 2 days before today. So Tuesday, there was absolutely perfect target recognition, 358.05. I don't, perhaps I do remember, this is copper, exactly what that low was that you can see there. I'm not going to drive you mad about this because I talk about it all the time. That particular low, which was Tuesday, the low of that bar was 358.15. Okay, where was the Danielcode number? 358.05. The way this market moves, that's 2 ticks. That's all. Incredible stuff, isn't it? And that goes on all the time. So if you're a day trader, which we're coming to, I hope you're sucking this in because it's vital. You have a look at this market. This is the Russell. You can see it's given you 2 lots of target recognition there. Way back now, long time ago, Tuesday, the low was 1734.4 against 1733.7. 7 ticks variance, that's all. The close, probably even closer, 1740.2 against 1741, 8 ticks variance. Okay, what about today? Look where the low was, 1728.8. Where's the blue line? 1728.0, 8 ticks variance, nothing. It's not even a hair. And the day's close, 1742, 0. Where's the blue line? 1741. 1 point variance, nothing. Thick as a hair. And this happens all the time, which is why I'm showing you this. This is silver, which had target recognition 3 days ago at 2141.50. And as you can see, look where the closes are yesterday and today. This market is seeking to find these Danielcode numbers. In fact, today, which looked so totally ordinary, have a look. The close is actually 2102 and 210. Did I say 2102? Here, 2102. Where's our number? 2108. That seems a long way away, doesn't it? I'm thinking of the day before. Do forgive me. 2114.5 against 2113. Absolutely marvelous. The day before that, now we're going back in time to Monday, that close was 2142 against the blue line 2141.50, 1 tick. That's what happens all the time. Why is this important? Because day trading works on exactly the same numbers as you're going to see. This is wheat, that big bar down, the big outside bar. That came on news from Russia, that for the second year it's having an absolute bumper harvest. And that depressed the market. More supply means lower prices. But the market's had a bit of a think about that since then. It's just not quite so sure of any if that's right. Yeah, here are T-bonds. We're going to talk a lot about T-bonds. Perfect target recognition, perfect trading. There we are. We've had 2 trades out of T-bonds, and we've had 4,900 out of one and 2,500 out of the other. A bit less at today's high where we got stopped out. Okay, day trading. Let's look at this day trading. The very first thing you must do to be a successful day trader is equalize the bars. In other words, I don't want to use minutes. I don't want to use 5 minutes or 10 minutes or any other minutes. I want to use one of a number of tools. This is called the breakout chart, where you set a breakout level, and the chart will just measure, it will close a bar every time that breakout is reached, which means that these bars tend to be about the same size. And that's very important because we're going to use some indicators to create buy and sell signals, and those indicators work brilliantly if the bars were approximately the same size, and get run over when we've got, say, huge bars and really, really small bars. So this equalizes everything. And these are the normal Danielcode blue lines that I've been talking about all the way until today, until now. And you can see if we simply put those same blue lines on this chart, I'll find my tools that I can show you. Here it is. And here is the spotlight. Have a look at this. These lines are running from this high here down to this low. This is the first push down. This is the last swing. Look at this. This bar is exactly on that blue line, and up it goes. This bar is exactly on that blue line. This market is saying to you, I know these numbers and I'm tracking them. That's what it's saying. Right down here, I know these numbers and I'm tracking them. Hit that and gave you a key reversal bar. What happened? Little rally up here, failed before it got there. Then you have this big key reversal bar here. And the low is exactly on that blue line number, which you were able to create as soon as this high was in. There's nothing secret about it. And you can see the market moving up. This is Wednesday's trading, folks. I didn't have time to do today's, but it's exactly the same. And let's see what happens next. Okay, done that. Can we move on? Here we are. Now, these are our blue lines. Blue lines are extensions of the range. These are our red lines, and red and black lines. The black are the extra important ones. And these are retracements of the range. So from this low, where does the market go? Straight up to the red line. And it makes sure you know about it because it closes on it twice and opens to tick above it twice. Make sure you know that's a turn. And then it goes down. Where does it go to? You'll see in a moment. Then rallies back up, goes to the next lot of the red lines. In this case, we have 2 together. And finally, to close out its day, the high came exactly at the next red line. You can put those on with the Danielcode tool. You've got that. Here we are. This is the dotted line. Shows you what part of the chart the tool's covering. It's all going from that low in here back up to a more important high. And this is what we're showing here. Remember this high here, we had resistance, had Danielcode targets all over it. Look at this first pullback. Where does it go? Exactly to the Danielcode retracement. Where does it go then? Exactly to the Danielcode retracement. What about the next one? Well, let's have a look. Here it is. Where did this pullback go to? Exactly to the Danielcode retracement. I'm not kidding. Markets do this all the time. Day trading works fabulously on the Danielcode retracement tools and the Danielcode blue lines. In fact, I don't know how you trade at all if you haven't got them, as you'll see in a moment or two when we get on to what Leo's been doing and what he's been kind enough to share with us. Okay, let's see what we've got. Here's the next chart coming up. We got that, more retracements. I think we did that. Here's the next one. These are your standard Danielcode buy and sell signals by time. A lot of you know about time signals. A lot of you have done the tutorial and learned how to create and trade using time signals. Have a look at it. Simple enough, isn't it? This is a 59 bar breakout, which might be too slow for you guys, so don't lose hope. I'll show you much faster applications of this as we adjust that breakout range. But there's pretty well perfect for Wednesday's trading. 3 buys. There was a sell that wasn't elected right at the end, but it went right to its target at 4,300 up there. Here is making it faster. I've reduced the breakout period from 59 ticks to 44 tick breakout. Just get more bars, but it's doing the same thing. You've duplicated one signal. That's real. That's when you get the time cycles so much faster, you get more signals. And that's down to 44. Have a look at this. This is down to a 29 tick breakout. And that means this is running at about 4 to 9 minutes a bar, half an hour after the open. That's as fast as anyone could ever want it. And there it is. It's all straightforward, isn't it? Got to have target recognition. Got to have your Danielcode time signals. And very attractive to trade, day trade right now because of the massively reduced margins. So this is from Leo N, who's with us. He's from the cold country up in Canada. And as he was doing his tutorials, he went ahead and showed me some of his day trading. When he got these Danielcode ratios, he just slapped them straight on the chart. And look what happened. Support, 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 resistance, support, support and resistance all at once and down, and then a breakout up. So thank you for that, Leo. You remember sending me that. And this is from Leo as well. And he said once it broke through the 50% consolidation, up, up and away. And you can see where that consolidation was. Danielcode ratio at 50%. Really wonderful stuff. Okay, if you like day trading, I'll teach you to do it properly. Okay, let's move on. This is the US dollar. Don't have to say a lot about this other than high interest rates are making the US dollar awfully attractive to investors. And you can get some pretty good interest rates at the moment. And of course, don't forget it's actually a boon for the major banks because interest rates are going up through the roof, or at least up to the top of the veranda. And banks have more long-term funding. They're just gobbling it up as it goes. It's very, very profitable for the banks. Okay. Remember, almost 80% of the time, gold is in an inverse relationship with the US dollar index. Dollar up means gold down. Dollar down correlates with gold up. I've shown you many of those charts. Go back through these webinars, folks. There are 100 or more of them now. Anyway, that was day trading. Did you like that? I can teach you how to do that exactly. Click on this link. It's our Learn to Trade link, and we can talk about it. So Danielcode tutorial will make you a super trader. This is the link to see the curriculum. And these quotes here are from our great friend Greg Palladini, who's with us today. And when Greg was doing his second tutorial to learn about trading time, at his first tutorial I wasn't teaching. I don't think I had finalized my thinking about time. I was just teaching price. And then Greg came back some years later and said, I want to do a tutorial just to learn trading time. And he's just gone from strength to strength. Loves it, very, very good at it. And if you're interested in the tutorial, get your free trial, then go to the forum and look for the link that says Danielcode trading tutorial that Greg's created. And he's been kind enough to list all of his comments about what he experienced while he was doing the tutorial. And Very, very generous of you, Greg, and we most certainly appreciate it. And you can find out all about that, folks, or you can take a tutorial now, special offer. We have to get more people in doing tutorials. You need to know this stuff, folks. Markets are never going to be better than they are now. They're roaring, and there's going to be some disasters not too far away, I promise you. But disasters for others are joys to us because we get paid both ways. So for the first 3 people who can make contact with me at jneedham@thedanielcode.com, I'll be happy to reduce the fee by 20%, normally $7,500. Been that way since 2004. I've never changed it. But I'll be happy to give you a discount if you can start your tutorial before the 18th of this month. I have some gaps in my schedule there which I'd like to fill. If you're already a good trader, I'll make you better. If you're a complete novice and if you've never seen a trading chart, I'll teach you everything worth knowing. 2 of the very best traders that we have at the moment have been with us for a long time. Frank DB is one of them. And they came to me and said, I've never seen a financial market chart, and I don't even read the financial news, but I like what you write, so will you teach me how? If you don't know much, it's easier for me because we haven't got to get rid of all your bad habits. Let me know. Let's get you started. It's just a wonderful, wonderful opportunity. Okay, let's get on to gold. And this is our famous Super 6 chart of gold. Every bar is created from 6 trading days. And I'm doing 4 of these, folks. If you are subscribed to our Danielcode Super package, we're going to put 4 of these into your link well, probably be 2 or 3 times a week. It's a bit like daily charts. Sometimes they need to be updated almost every day. Other times they're happy to sit for 2 or 3 days. So these will be synchronized with our normal chart process for members charts. That is, they're done on the weekend and Wednesday evening, updated, and as necessary otherwise if we get some big volatility. So this was gold on Monday. Look at this target recognition. There was a ton of blue lines there. As the market goes on a trend for longer, every swing creates more of these targets, blue lines and red lines. And it gets to the stage where ignorant people say, oh, you put so many lines on it, must land on one of them. That's not right. It doesn't have to land on any of them. And if you don't know Danielcode, it won't land on any of your numbers. These are quite different numbers. You don't see these anywhere else. But have a look at this target recognition on the way down. Then we had this blur of blue lines, target recognition exactly down at that 1846.7. Here's what happens the next day. Target recognition again at the low, 1830.4. This goes on all the time. What about today? 1826.6. That blue line's been on that chart for a number of days. And there it is. Absolutely perfect target recognition. So what is happening with gold? Why have we got this sudden sell-off in gold? I can tell you that this particular pattern that the market's exhibiting, which is a gap and run, gap down and then run, that's very, very, very unusual. I can't remember having seen that before. And what's happened, the only explanation I can come up with is that sometime right when this was all happening, which was the high of this particular move, we're on the sell-off now, was September the 20th was the high, and we had a TO3 sell signal on that bar. Now, the very next day, which was Thursday, 21st, it gapped down, left a big gap that hasn't been filled. Markets don't like leaving gaps. They usually go back and fill them fairly promptly, but it's left that gap and it's sitting there, and down it's gone. What's happened? Well, China is in a bad way at the moment. There are all sorts of problems going on in China. Most of them are related to debt, particularly on the property sector. We know about Evergrande, one of their biggest, maybe their biggest property developer, is breaking covenants and breaking the terms of its lending. And it has China mainland bonds and also has US bonds, and it's defaulting all over the place. Just looking at the background to this, that China has been the major gold consumer for a long time now. And it tells you how it's been aggressive it's been buying them. Gold reserves have grown by 165 tons, of which 103 tons has been bought in 2023, making it the largest buy year to date to August 2023. So this is the Evergrande property story. They've been suspended on the China Stock Exchange for 17 months, and they've almost wiped out its value. The boss, the chairman and chief executive of Evergrande has disappeared, which is what happens to people in China that the administration is unhappy with. Residential security, they call it, residential oversight. They've got an expression for it. Anyway, he's been disappeared for the time being. Apparently, he was trying to liquidate some of his investments offshore, which Chinese rulers that be didn't like that idea very much. I'm sure the creditors didn't either. And they're the big problems in China. And I think that that's what put a dent in the support for gold, which has been pretty strong really until then. Grains, I've told you about this. This is just a news story, basically. That big bar down, the big outside bar down, that came on an announcement from Russia that it was having its second season of wonderful harvesting. So more supply, price goes down. The market's had to think about that for a while. Today it's pretty well back where it was a week ago. So that's an emotional thing. So this was the bar it actually happened on. It looked good at the time, but it's since been reversed. This is a very, very important chart, folks. This is UST bonds. This is trouble for some and a banquet for us. I'm sure most of you, all of you who've been with us for a while anyway, have seen this chart many, many times. I show it to you periodically over the years as it's moved on. And if you look at the red line running diagonally through it, that's the actual period of the chart that this particular tool is analyzing, and we stopped extending that back in about October 2016, I reckon. Yeah. And since then, it's deeply been running on extensions of what it had done until then, which is pretty extraordinary. So if you look at that thick red line going up diagonally, that's the median or the mean, and above it are standard deviations from the mean. Now, these are not your ordinary mathematical standard deviations. These are Danielcode standard deviations. If you've done a tutorial, you know what I'm talking about. And from the low back in 2018, late 18, this market rallied up to finish up 1, 2, 3, 4 standard deviations above the mean, right up in here somewhere. Let's have a look. Okay, in here, 4 standard deviations from the mean. And since it's been running off, I've been putting on the points. You can see this one March, this one April, this one September, where this market was rallying as it reached one of these Danielcode support lines, which are, these are not lateral progressions, these are angular progressions, and angles are very important on chart analysis because they're allowing us to see a combination of time and price. And you can see, I know it looks like a total disaster, this is the final important time cycle at the moment, and this market is running straight down there, which is why you can't see how far this bar's gone. And the last price I called on this was 125 correct 10, which it hit and then bounced for about 7 or 8 months. And let's have a look what's happened if I take that off. Well, here's a close-up of it. You can see the same thing. You can see where this market is. It's broken through 5 standard deviations from the mean to the downside. It's all on that 70 cycle, as you can see. And this is a Danielcode. This is a long-term trend chart. This is a 24-day chart. Every single bar on here is 24 days. So if that confuses you, you can think of it as a monthly chart. It's close enough to it. But look what it's doing. It's running straight down that number, which was a very important time cycle. It's been on the chart. I can tell you when I started that time cycle was in April 2017. And now it's come to pass. Okay. The 70 cycle running from April 2017. Extraordinary stuff, isn't it? Okay, and it's also dangerous. This stuff is very dangerous. You can see now I moved off that time cycle, which was blocking it. You can see that the market went down to that 114.21 I had it at. It went a little bit past there, not much. Rallied up and up since then, and look where it is now. It's broken through that final level of support, and it's going lower. And it looks to me like it's heading for the next level of support. Which is all the way down at 105 caret 14 at the arrowhead. You see, it's called a caret. It's how the old CBOT markets are reported in their price. Modern CME markets, they've both merged now, but there was a CBOT separately, Chicago Board of Trade, and CME, Chicago Mercantile Exchange. And when they merged, one of the conditions was that CBOT brokers be allowed to keep their traditional pricing, which is really kind of silly. And that's where it's sitting now. So you can see where it is. That's the rule of eights that rules everything. And until about 43 years ago, maybe that should be 52 from memory, all stocks were quoted in eighths and sixteenths, or half of an eighth. Right. Let's see what else. Here it is. So this is the daily chart. It's given us 2 nice trades. It gave us a $5,000 trade down, 2,500 after that. It's a bit less today. We got stopped out. And you can see exactly, look where it stopped, right on that blue line. I know I go on and on about it, but I'm trying to get across that all markets run off these blue lines and these red lines all of the time. And it's quite extraordinary. You should learn this stuff. If you'd be interested in taking the Danielcode trading tutorial, where I'll teach you everything worth knowing about safely and profitably trading futures and Forex, email me, jneedham@thedanielcode.com. Or if you'd like to talk about it, you can Skype me on jneedham2. And I put down there the US office hours and the Australian office hours. And if you would like to talk to me about doing a tutorial, do please. jneedham2 is my Skype name. And leave a message and add to that message what time zone you're in. I don't want to be trying to return your call and it's midnight or 2 o'clock in the morning. So just do let me know what time zone you're in, and I will get back to you as promptly as I can. Okay. Once you've finished thinking about all of this, I'd like you to go to the chart archives at the website and click on those archives. They're all organized by date, all markets, futures and Forex. And what you will find is that it's incredibly hard to find a market that's ever turned anywhere without target recognition. This target recognition that I keep talking about is vital for day traders. Other traders, do I recommend day trading? No. I maintain you can make more money trading daily bars than anything else, and that's what you would be interested in. But if you want to do day trading, fine. Learn the right way. I'll be happy to teach you. Okay, I think that's where we are. If you haven't already, folks, please go and have a free trial. And if you have any problems logging on to your free trial, it may be that you had a previous free trial and the machine remembers you and doesn't want to give you another free trial. In that case, email Terry at support@thedanielcode.com and he will be happy to get you organized and working. Here's the disclaimer, which you should pay attention to. If you don't know how to trade, it is very, very easy to lose all of your money very quickly. In the same way, if you do know how to trade, it's very, very easy to make a lot of money really quickly, as we've shown you today. Chart after chart after chart this week, just making money, turning at the Danielcode numbers, following a Danielcode TO3, TO3 plus signals, and the success signals as well. There's about, I don't know, 14, 15,000 profit sitting in the success signals. Been absolutely marvelous. So that's it for today, folks. I hope you've enjoyed this. I hope it's given you plenty to think about. And I look forward to talking to you at the next tutorial. And there's so much stuff happening at the moment, we might well have a tutorial next week. So keep an eye out for that. I'll let you know if that's what we're going to do. And that's us for the moment. So bye-bye. It's Friday down under where I am. And I've put on my trades for today. So I'm I'm getting ready to think seriously about a Bloody Mary. It's a beautiful day outside. It's about that time. So thank you for being with me, folks. If you're interested in the tutorial, send me an email. If you'd like to have a chat about it, Skype me, jneedham2, and I will look forward to talking with you very soon. All the best for now. Bye-bye.